Which crypto has seen the most real-world adoption? Well, believe it or not, but the answer appears to be Near Protocol. Its top 2 dApps alone boast over 30 million monthly active wallets. Now, comparing these impressive adoption metrics to Near's market cap gives the impression that this project is undervalued. But as always, there's much more to this story than meets the eye. That's why today we're going to explain what Near Protocol is, bring you up to speed about some of its most important updates, and examine just how much potential its Near coin could have. I'll start, as always, by saying that nothing in this video is financial advice. It's purely educational content that's meant to assist you on your crypto quest. Also, be aware that a few members of the Coin Bureau team hold Near as part of their crypto portfolios, but we promise to be objective in our analysis. And if you want to know which other cryptos we hold as part of our portfolios, then check out the Coin Bureau Club. In addition to our crypto portfolios and watch lists, members get daily crypto market updates, weekly reviews of small cap altcoins they voted for, and even exclusive deals. You can become a member of the Coin Bureau Club using the link in the description. Okay, so with all that said, it's been almost 2 years since we last covered Near Protocol, so I reckon a refresher is in order, don't you? Okay. Near Protocol was founded in 2017 by software developers Alexander Skidanov and Ilya Polosukin, and it was originally an AI project. We'll come back to the significance of that later. Now, Near Protocol was built by a US software company called Near Inc., and its ongoing development is coordinated by the Near Foundation, a non-profit based in Switzerland. Note that Near's website mentions a third entity based in the Cayman Islands, likely a shell company for Near Inc. In any case, Near Protocol raised around $35 million in various ICOs between 2019 and 2020, and raised an additional $500 million from high-caliber crypto VCs in 2022. For context, it's quite rare for a crypto project to raise money after launching, and such raises generally underscore the high-quality nature of the project in question. For reference, Near Protocol's mainnet launched in October 2020, and it is still technically in development. Under the hood, Near Protocol uses a sharded proof-of-stake blockchain which consists of 4 shards. According to a blog post from 2021, each shard can process 1,000 transactions per second. Now, for those unfamiliar, sharding involves splitting a blockchain into different pieces so that transactions can be processed in parallel. Near Protocol is in the process of implementing dynamic resharding, which will make it possible for shards to be created and destroyed based on demand. The practical effect of this is that Near Protocol theoretically has infinite scalability. Of course, the trade-off is centralization. Near Protocol's sharded blockchain is currently secured by just 215 validators. Becoming a validator currently requires a minimum of 26,000 Near, and to put things into perspective, that's almost $100,000 at Near's current prices. Thankfully, though, delegation is possible with no minimum stake. The staking rewards are currently around 8%, and the lockup time is only around a day. The caveat is that slashing is enabled, so be careful which validator you choose. Besides staking, Near is used to pay for fees, which are burned unless the transaction involves a smart contract, in which case 30% of the fee goes to the smart contract and 70% is burned. This is to incentivize developers to build on Near Protocol. Note that all wallets are technically smart contracts. You'll see why that's relevant later. Now, in terms of tokenomics, Near had an initial supply of 1 billion, which was distributed as follows. Around 35% to investors, around 14% to the team, 10% to the foundation, and the remainder to various ecosystem incentives and grants. Note that Near Protocol has spent a lot of money on its ecosystem. Again, you'll see why that's relevant later. Now, as you can see, Near has, or rather had, an incredibly aggressive vesting schedule. Its supply has increased by roughly 10x since its mainnet launch less than 4 years ago. The silver lining is that 100% of Near's initial supply will be in circulation by mid-next year. Note that Near has around 5% inflation. Now, regarding Near Protocol's real-world adoption, this is mostly due to a Singaporean payment rewards app called Kaiching, which boasts almost 27 million monthly active wallets, and Sweat Economy, a move-to-earn app with over 3 million monthly active wallets. Note that this doesn't count its crypto dApp usage. The reason why Near Protocol has been able to gain so much real-world adoption is essentially because it's managed to abstract away the complexities of using crypto from the front end. This has arguably been Near Protocol's biggest innovation and the biggest edge it has over other crypto projects. Note that the link to our last Near Protocol review will be in the description, by the way. And if you're enjoying the video so far, smash that like button, subscribe to the channel, and ping that notification bell so you don't miss the next one. Now, it's safe to say that a lot has happened since our last Near Protocol review almost 2 years ago. Unfortunately, we won't have the time to go through every single update here. So, if there are any important updates that you think we missed, feel free to drop a comment down below. So, in May 2022, Near Protocol partnered with Infura, which creates some of Ethereum's most important infrastructure. This partnership made Near Protocol more accessible to the over 430,000 developers building with Infura. This highlighted Near Protocol's developer focus. Then, in June 2022, Near Protocol began testing a new type of validator called chunk-only producers. Now, chunk-only producers made it possible to increase the number of validators above the limit of 100. It's not clear how many chunk producers there are, but presumably around 115, given that there are 215 validators in total. In July 2022, institutional crypto custodian Fireblocks added support for the Near coin. This underscored the institutional interest in Near, which likely has its origins in the project's similarities to Solana. As a fun fact, the founders of both crypto projects have apparently been good friends for years. And you can learn about the similarities and differences between Near Protocol and Solana using the link in the description. I digress. In August 2022, Near Protocol revealed that it had fixed a vulnerability in the Near wallet. Basically, using email recovery for the wallet was leaking the seed phrases of users to a third party. Fortunately, it seems no assets were lost, and the Near wallet has since been phased out, so I guess it's history now. Then, in September 2022, Near Protocol officially introduced chunk-only producers as part of the second phase of its sharding roadmap. The Near Foundation also partnered with a VC for a $100 million Web3 fund, and Tether's USDT stablecoin went live on the Near Protocol blockchain. In October 2022, the Near Foundation partnered with Google Cloud to make it easier to build tools on Near Protocol's developer platform, Pagoda. Near Protocol also shut down the USN algorithmic stablecoin it had launched shortly before Terra's collapse. In retrospect, it was very bad timing. In November 2022, the Near Foundation partnered with one of Latin America's largest processed food companies to create a Web3 loyalty program. It's not clear if the loyalty program ever came to pass, but the announcement noted that it would be implemented sometime in early 2023. Then, in December 2022, Alexander founded an AI company with the goal of creating the first artificial general intelligence, or AGI. Now, you'll recall that Near Protocol originally began as an AI project, hence the name. AI is Near. To our understanding, Alexander is looking to leverage Near Protocol in his new AI venture. In January 2023, the Ledger hardware wallet added support for Near, making it possible to hold the coin in cold storage. And if you happen to be looking for a hardware wallet, check out the Coin Bureau deals page. It's got the biggest discounts on the best ones. The link will be down in the description. Anyways, in March 2023, Near Protocol revealed its blockchain operating system for Web3, dubbed BOS or BOSS. Boss will eventually be a one-stop shop for every crypto dApp and protocol in existence, and will make it possible to interact with these dApps and protocols from Near Protocol without having to switch chains. In April 2023, Near Protocol appears to have partnered with MasterCard. I say appears because the partnership seems to be limited to one of Near Protocol's regional hubs in the Balkans. Regardless, this limited partnership foreshadows a more expensive partnership with the credit card company. In May 2023, Near Protocol integrated with the Wormhole bridge to increase its cross-chain availability. Now, this is interesting given that Wormhole is backed by the same entities as Solana. Some would say that the integration is evidence that these backers are starting to become interested in Near Protocol. Then, in June 2023, the SEC named Near as one of the cryptocurrencies it considers to be a security in its lawsuit against Coinbase. This is significant because it means that Near could be delisted from US exchanges if the SEC wins its case against Coinbase, something that's currently up in the air. You can learn more about the SEC's case against Coinbase in the description. Moving on. Now, on a more bullish note, the Near Foundation partnered with Alibaba's cloud division that same month. The purpose of the partnership was to accelerate Web3 growth in the Middle East and Asia. It goes without saying that Near Protocol has been very successful on that front so far. In September 2023, Circle launched its USDC stablecoin on the Near Protocol blockchain. And about a week later, Near Foundation CEO Marieke Flament, I hope I've pronounced that right, resigned. Now this is fascinating because Marieke used to work at Circle. From the outside looking in, it looks like she stuck around until the USDC deployment. Whatever the case, in November 2023, Near Protocol held its third annual NearCon conference. Naturally, there were lots of bullish announcements. Highlights included the launch of an AI marketplace, the launch of a data availability layer, a partnership with Ethereum restaking protocol EigenLayer, an integration with Pyth Network's lightning-fast data oracle, a partnership with NIM for privacy, and a partnership with Polygon for zero-knowledge proofs. And, as a cherry on top, Ilya became the CEO of the Near Foundation, reclaiming the throne, so to speak. It's believed this will change the project's focus. Funnily enough, it seems that one of the first changes that Ilya made was firing 40% of the Near Foundation staff in January of this year. This was reportedly done despite the foundation having solid financials. This all ties into Near's price action, which has been one heck of a rollercoaster. Near practically went straight down since we last covered the project and seems to have hit its bear market low last October. This is not all that surprising considering that this is when most altcoins appear to have bottomed. What is surprising, though, is how much Near has rallied since then. It rallied by almost 5x before correcting and appears to be preparing for another move higher. This is likely due to the fact that Near's supply and demand equation is looking better than it ever has. For starters, most of the supply is now in circulation. The Near Foundation's last transparency report also suggests that it's well capitalized. As of July 2023, it held almost $350 million in cash and over 315 million Near coins. Newsflash, but this means that the Near Foundation still holds around a third of Near's entire supply, which is a bit scary. But again, the fact that the Near Foundation is well capitalized means it likely won't have to sell much of this Near anytime soon. The catch is that the Near Foundation had previously committed hundreds of millions of dollars of Near to various initiatives. It's not clear if this Near has been sold yet. And what's annoying is that the Near Foundation apparently hasn't released an updated transparency report. What's even more annoying is that it has apparently not disclosed which wallets it controls either. The most annoying part, though, is that apparently none of Near Protocol's explorers show the rich list. What Near Protocol's explorers do show is that demand has gone exponential. The number of total wallets is about to hit 100 million. The number of daily active wallets is approaching 1 million, and the number of daily transactions has been going parabolic since last September. As you might have guessed, this is because the Kaiqing app apparently launched in August of last year. The launch of Sweat Economy in the US in October has also likely contributed to the demand growth as well. And to top it all off, the total value locked in Near's DeFi protocols is starting to grow rapidly too. Now, if this demand-side momentum continues, Near could rally as high as $8 in the short term, consistent with the bull flag pattern which appears to be forming on the weekly, and the zone of resistance from the previous crypto bull market, which is likewise around $8. The fact that Near only has a market cap of around $3.5 billion means that it has a lot of room to grow relative to the other Layer 1 blockchains. If Near follows Sol's footsteps from the previous bull market, it could rally by more than 20x during this bull market. But make no mistake, it won't be up only. And if you're looking to trade the volatility that Near will experience as it hits new all-time highs, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on the best crypto exchanges. These deals are only available to our viewers and will only be around for a limited time, so take advantage of them ASAP using the link in the description. Anyhow, whether Near can hit a new all-time high ultimately depends on its upcoming milestones. Near Protocol published an updated roadmap for 2024 back in January, and it noted 7 milestones, most of which are related to the project's endgame of dynamic resharding, which you will of course remember from earlier. Now, the first milestone will be the introduction of stateless validation. If we understand correctly, this will improve the scalability, aka speed, of each of Near Protocol shards. Stateless validation will be introduced sometime in Q2 and will mark the end of the third phase of the resharding roadmap. The second milestone will be the introduction of, quote, congestion control and transaction priority. This will localize transaction processing so that congestion caused by a single dApp doesn't bloat the whole blockchain. Note that this is similar to what other crypto projects like Solana have implemented. The third milestone relates to something I mentioned earlier, and that's account aggregation. This will make it possible to interact with dApps and protocols on different blockchains without having to switch chains on the aforementioned Boss platform. This is definitely a milestone to be on the lookout for. The fourth milestone also relates to something I mentioned earlier, and that's the introduction of a zero-knowledge-based smart contract standard for Near Protocol. This will be developed as part of the project's partnership with Polygon, and it should likewise increase Near Protocol's scalability. The fifth milestone is related to something you may have missed in my earlier comments, and that's Near Protocol's new data availability solution. This will make it possible for Near Protocol to support and secure Ethereum's Layer 2s. If that sounds familiar, it's because Celestia is doing something similar. More about Celestia in the description, but back to Near Protocol. Now, the sixth milestone could be related to something I mentioned earlier, and that's Near Protocol integrating with MetaMask. FYI, ConsenSys is the creator of both MetaMask and Infura. As such, it's possible that Near Protocol's MetaMask integration is a consequence of its Infura partnership. Now, the final milestone is straightforward, and that's to research the future of blockchain sharding. This will likely ensure that Near Protocol stays on the cutting edge of this important scaling technology. And speaking of which, I'll remind you that there are still 2 more phases left in Near Protocol's resharding roadmap. The phase we're currently in is Phase 2, with Phase 0 being the first, and its focus was sharding both the state of the blockchain and its transaction processing. To our understanding, the introduction of chunk-only producers introduced the latter, and stateless validation will introduce the former. The fourth and final phase is Phase 3, and it will introduce full dynamic resharding. Per a previous blog post, quote, "The network will be dynamically split into shards and then merge based on resource utilization. This will enable NEAR to expand almost infinitely." What's odd is that Phase 3 was originally scheduled to be introduced by the end of 2023. This brings us to the challenges that we foresee for NEAR protocol. The first challenge is NEAR's supply and demand dynamics. To be clear, the demand metrics for NEAR are seriously impressive. The problem is that most of the people using NEAR protocol aren't directly investing into the NEAR coin. This is a problem because fees on NEAR protocol are extremely low. Consider that it would take roughly 1.5 billion daily transactions just to offset NEAR's annual inflation rate of 5%. NEAR protocol is currently processing around 5 million transactions per day, meaning it would need a 300x increase to do this. The bigger problem, though, is that the NEAR Foundation holds a third of NEAR's supply, and history has shown that it will spare no expense when it comes to funding the project's growth. Although this will be beneficial for NEAR in the long term, it's likely to suppress its price in the short and medium term. The second challenge relates to the first, and that's regulation. The way that NEAR protocol is currently governed is likely a problem for regulators like the SEC, who you'll recall noted NEAR as a security. Ilya, being the founder of the project and being the CEO of the foundation, is something they could take issue with. To Ilya's credit, though, this is something he seems to be hyper-aware of. That's because he published a blog post in January about his vision for how NEAR protocol could introduce decentralized governance. Ilya thinks that AI could play a role in this governance, which could create other kinds of issues. For what it's worth, the fact that NEAR protocol isn't explicitly focused on financial use cases arguably means that it's unlikely to be a number one target for regulators. After all, what big banks and asset managers can't stand is financial competition. For now, NEAR protocol is playing on an entirely different field. This, however, pertains to the third challenge, and that's competition. Now, we may be mistaken, but it appears that NEAR protocol has yet to align with any particular niche or narrative. The result is that the project has been largely overlooked by those in the crypto industry, and this could continue to be the case. Meanwhile, many of NEAR protocol's competitors have started to align with specific niches or narratives. So this will leave investors and users asking the question, why should I go with a generalized blockchain for a use case when I can get a better experience on one that's been custom built or adapted for this use case? The catch, though, is that NEAR protocol's lack of alignment and solid fundamentals means that it is perfectly positioned to align with any niche or narrative that it wants to. Now, as far as we can tell, it's slowly but surely trying to align itself with the AI narrative, given that it's consistent with the project's origins. If this is indeed the case, then all that it needs to do is double down on this narrative, and it could easily take over that niche. This could have the potential to make NEAR one of the top-performing cryptos during the next bull market, because everyone knows that AI is and will likely continue to be the biggest niche out there. In sum then, NEAR protocol faces challenges on the supply side and on the regulatory front, and has been struggling to find a narrative or niche. All this considered, though, these are challenges that it can and most likely will easily address, all while rolling out some of the most advanced crypto scaling technology around. Of all the large-cap cryptos, NEAR is one of the few that has unrealized potential that could result in outsized returns. All NEAR protocol must do is seize that potential in a way that appeals to crypto investors and users, not just no-coiners who are looking to lose a few kilos by walking. And on that note, I'd better get to the treadmill. By the way, that's all for today's video, so if you found it informative, smash that like button to let us know. If you want to stay informed, subscribe to the channel and ping that notification bell. And if you want to help inform others about Near Protocol, be sure to share this video with them. As always, thank you so much for watching, and I'll see you in the next one. This is Guy, over and out.